Scotty.
Hey, TJ.
Well, hello, is this little Stevie Gomez on the line?
That was warranted. I'm here.
Aha.
I'm here.
Okay. So for some reason, this poll thing's staying open on my screen, so I'm just gonna put it back in its home. So I guess I'm coming through loud and clear. Hopefully, you can not see my screen just yet, but with a magical push my magic button and let me know when we're good, Steve.
You're good.
No, you're good.
Oh, thank you.
All right, ladies and gentlemen, welcome to another edition of the Trading Studio with myself and Steve Gomez. Today is June 2nd. Summer is upon us, and with this change in the seasons, most times we see a little change in the market as well, a little sentiment change. Maybe we'll see a slowing market in this summer, get back to what we know is a regular summer trading session. The past couple of summers have not been so quiet. So are we going to have another one? I don't know. They might come in threes like a lot of other things.
You know what those people that love to say sell in May and go away, they're saying right now? They're saying sell in May and rue the day. That stuff does not always work. That stuff does not always work.
Yeah, and because if things like that always worked, well then we probably would not be here. We'd be deciding which island we were going to purchase next and ironing our $100 bills nice and crisp.
Creating our own currency.
Exactly. Enough with the fiat. All right, so before we get into too good of a flow here, Steve, first, the old lawyer speak. Just want everybody to be fully aware that we are not here to give investment advice or trading advice. Everything that we share with you here today is strictly for educational purposes. So if you need the advice of a investment professional, you need to go elsewhere, and there's plenty of places where you can find those types of chaps. All right, so as always, we're going to start off with Steve's commentary on, where's the market, where we come from, where we going. So without further ado, let's just hop right in there, and then we'll come back to the agenda.
Sure.
So,
yeah, give us a nice big SPY daily chart.
Yeah, there we go.
And I'm going to do my best to not predict, but speak in a very heavily biased language. A lot going on here now. We've been in a lot of past weeks where I didn't really have as much to say, but I'm really, really seeing something here. And let's go ahead and zoom in just a little bit more. The two orange lines there have been a very definable trading range that we've been going back and forth through. And as we get to these levels, we find out what the true intent and the interest of the market as well. That little bottom wick as we got down to the 203 level really signified, yet again, buyers are in control of this market. But we're still in this trading range. You can see on the screen there what is very, very textbook, shaping up to be what they call a cup and handle. And that's essentially just a way in which price action tries to get above a resistance level, and it takes a few times. Now, what I'm seeing here lately is pretty interesting. And again, I'm not in the business of predicting, but I will say this. I would hate to have my bias be short. My bias is not short right now. My bias is to the long side. I'm not saying we're going to break out, but everything that's lining up in the sand to me, all these footprints in the sand, which is what I call a chart, is so much more important to me than what other people think about $63 billion in outflows of managed money this year, or what they think about constant revisions in GDP, or what they think about other things. That stuff does not matter to me. I don't care what I care what the Fed and the central bank's doing in the bigger picture, but I don't use those types of global and macro and fundamental type events skew my thinking. What skews my thinking and gets my bias is what the crowd is doing. And the way to see what the crowd is doing, because the crowd's always right, for the most part, there are times when they're not, but the crowd is nudging up here against that upper orange line after hardly zero pullback. We had that big bounce off of the low end last week when it became apparent that the bulls are still in control, and there was not much give back. We've been going sideways, and you guys have heard us say many times, price can consolidate in price, in other words, pulling back, or price can consolidate over time, going sideways. And the latter one, price consolidating in time, those are the ones that have the most potential pent-up energy. And so as we tuck up right here underneath this resistance line, I really think it's not a matter of if, it's just a matter of when it's going to be tested. Now, getting back to the contrary side, we do have the payroll numbers coming out tomorrow. I don't know what the market's going to react to. I don't know how they're going to look. And again, that's a whole other, can of worms if you want to try and dig into that, how the payroll numbers are derived and how our economy and health is, or how healthy our economy really is. It doesn't matter. The price action is moving higher. So we are going to have a catalyst event pre-market tomorrow. But I say it's going not to be a matter of if, it's just going to be a matter of when. This upper line here is going to be tempted and tested, I should say. I've been in the markets for 21 years, all right? Price action doesn't change. When Jesse Livermore was scratching on chalkboards and lining his penciled graph paper, they were looking at the same type of stuff. All this is doing is showing us market psychology and crowd psychology. And what it's showing me here is the crowd psychology is saying the risk is being short right now. And I'm just going to leave it at that.
I'm glad you brought up Jesse there, Steve, because that takes us, gives us a blast from the past, right? That type of fundamental technical analysis and charting really has not changed that much in a very, very, very long time, since way before we were even born. I mean, since the market's been actively traded and people have been doing their thing. You used to graph those out on huge pieces of graph paper, all right? And so while we're on the topic of, old great ones, right, this slide right here kind of speaks volumes, right? Because as everybody can see, and hopefully this isn't moving too fast, but it's a little model of the solar system. We've got the sun in the middle, all the planets doing their things, all the moons spinning around the planets. And guess what? You want to see things like this from your earthbound position, you've got to have a tool to do that. Galileo was the first guy to figure that out. He invented the telescope, which allowed him to start seeing these heavenly bodies. And guess what? Back then, when Galileo said, things are a little bit different than what you guys perceive. I've got this telescope, I can see. And they're like, well, we kind of think that might be the work of the devil, the witchcraft, right? And so how did they thank Galileo for his very important contribution to science, who some might say he's the father of all science? Well, they imprisoned him for the rest of his life. I guess he got lucky in the fact that they didn't burn him at the stake. But the reason I'm bringing this up is, we've got to let go of our, I guess the best term for this is our trading dogma. All of these old things that we've been taught time and time again, it's just not the way things really add up, right? So we are your telescope. Most people spend their whole trading career, if they're even lucky enough to call it a career, looking at the same old tired data. In other words, they're looking at the top level of data. Well, guess what? That data field has got many, many other dimensions. Now, unless you have a tool to let you see those other dimensions, you're never going to see them. Therefore, to you, they're not even going to exist. So how can you take advantage of something that you don't even know exists? First, you have to discover it. And that's what we do with trade ideas, is we show you things from a different perspective, right? It's the same old information, but we're just formatting it in a different way that actually becomes usable, right? So before we get into Holly and looking at the trades that she executed today in the trade rounds, which it was a nice low-key day for Holly, and I'll just go ahead and I'm going to pull over the slide for today because I believe it's been updated here. So we can see she just cranked out at 84 cents on 10 trades. Very similar to the S&P. Of course, the S&P is down here, Holly's up here, still maintaining a very nice gap. We've recently, Holly had her pullback, now she's just marching back up, and hopefully, before too long, we'll be curling right back up here. And as the SPY maybe tests its high, maybe Holly will be testing her high as well. Be interesting thing to observe, and the good news is we've all got front row seats for that. So, Steve,
yeah,
this little add-on right here, changes in the market, and of course, other than the obvious things like the candles are getting smaller, and we're tickling the tops, and the rise of the algos, because since you and I started trading in the mid-90s, obviously there was already a little trickling about automation back then, and then up into the 2000 eras when it kind of started getting traction. But we all know from firsthand experience when the onslaught came into being. So before I pull this slide over, Steve, I'm kind of waiting for it to run its course.
Sure.
And then so everybody can see it when it begins.
Yeah,
So
pictures are worth 1,000 words. We can talk all we want about how the noise has come into the markets, and I'm not trying to be a conspiracy theorist saying it's us and them, and this dark entity that's got it out for all of us. No, the market has become kind of a unintended consequence of the way the algos run, and the way they feed off each other, try and out-hump each other, for lack of a better word. But back when I started and Jamie started, our counterparties in trading were human beings, and they no longer are human beings anymore. They're pretty much all algos. And that's changed a few things in our market. Primarily, it's created a lot of noise. And with that being said, the graphic that Jamie wants to show you is from a great guy who's actually my hero. He's at Nanex LLC, Eric Hunseter. He's been sitting back outside in Chicago watching this data at the millisecond, microsecond speed, and he's calling out the SEC, he's calling out FINRA, he's calling out everybody that's not really paying attention to some of the abuses and a lot of the craziness that's going on in our market now. But he put together this really cool graph that shows you, I guess for lack of a better word, the amount of volatility that has crept into our market across a timeline. And so it's really interesting. If you haven't seen it, as soon as Jamie wants to pull it up, we'll see where it is. He's probably waiting for it to hit zero again.
Okay, here's the beginning.
All right.
Oops. Okay, so this is the beginning. You're not missing much here. This is just the
look at the bottom date down there. Look at the bottom date, May 2007. And so this is like the average volatility that our market is experiencing. But all of a sudden, something called Reg NMS came to light around 2008, and Reg NMS really kind of opened the door for these algorithms to statistically arbitrage each other, and whoever has the shorter cable and the faster line of data can start, creating a real nice edge for themselves based on arbitrage in the millisecond category. But we haven't even really scratched the surface here. We're just kind of starting to get into it now. You can start to see the volatility.
Right.
Each one of these frames is a different day and the hours throughout that day. And you can start to see the spiking getting a little bit more intense. Matter of fact, wait till we get to around May of 2010, because that's when we had our flash crash. And it's going absolutely bonkers at that point in time. But why are we showing you this? Because the market's changing. It's not a human against a human counterparty anymore. We have algorithms out there that are trying to sweep and take the most efficient advantage that they can. A lot of those advantages they take are in the first 15, 20 minutes of the day as the stop-loss orders kind of hit the market from overnight retail. And you can see here it's already a big, big difference from just a couple years prior. Yep.
This is only 2010 that we're in so far right here.
Yeah.
Now we just went to 2011.
And so again, the point being is that, the market's getting so much more sophisticated, and these are the types of things that we've been saying for years that Holly and the AI and Trade Ideas itself is cutting through. It's cutting through, oh boy, it's cutting through a lot of the noise. It's cutting through a lot of the uncertainty, and you really have to you have to bring a gun to a gunfight. And this market's a gunfight right now, and having some of the things and some of the tools that we have at our disposal.
Now we're starting over back to 2007. So that was a 5-year period where pretty soon, eventually, the entire thing looks like a fireplace.
Yeah, just one big noisy line. And so a tremendous amount of change has occurred in this market over the last 8 years or so. And are very important. Just as an example, the price alerts are a great way to see if we're getting shaken out of the noise. Maybe our entry points need to be a little bit different, a little bit more creative, more counterintuitive. Using the AI back testing, a lot of times you see something that is really, really good and it doesn't back test quite as well as you want, but you've seen us go through and optimize a little bit, and the optimization tells us, hey, you guys are crazy to be doing this before 45 minutes after the opening bell. The statistics and the odds and the data is showing you likewise. You need to move a little bit more to the center of the day. So again, those are just small examples of how we need to use technology to try and keep a fair fight going on in this very noisy, very volatile market that we have. And those of you that trade the open and see some of these things that happen, especially in the first 15 minutes, I know you know what I'm talking about.
Absolutely. And the point here, ladies and gentlemen, is we're not trying to scare you. we're trying to show you what you're up against here, right? If you don't want to become the proverbial fodder of algorithms, right?
Fish food.
Then you need powerful technology, and that's what we've got for you. So, there's just so much good stuff to share with you guys today. I'm looking at the clock and hoping that we have time to get through it all. But before we get into Holly, we've already seen the price chart, and we can see that she was up 84 cents on approximately 10 trades, right? And the interesting thing about what I'm going to say next is the fact that I kind of had an idea of how Holly might do today after the first 30 minutes of trading. And so for those of you who attend regularly, bear with while I do a little repetition here. For the new people, you should find this extremely interesting. So this is a screenshot of my compare count window this morning, the one I have on my default layout here, or this is not my default, but this is one I watch every day. And it's comparing the most actives, which in my opinion are the turbo breaks up and down alert windows. So this little guy keeps count of every time a tick comes through one of those windows and keeps a ratio for us. So after the first 30 minutes, I look over and I see this reading right here, 51% red, 49% green. Well, just because I've been doing this for so long, what that immediately whispered into my ear is, okay, it's going to be pretty much like every other day, because we only have so many days a month where things are really pumping one way or the other. Might be 2, might be 4, just depends on what's going on. And of course, taking earnings out of the picture and all that good stuff. If we're just in a regular market, earnings are behind us, what to expect? Use the surfer analogy one more time. I live half a mile from the beach. I'm down there quite frequently. I don't surf myself. I'm a little too old for that. You got to learn that stuff when you're rubber bandy. And I'm not so rubber bandy anymore, and I'm a Texas transplant. But anyway, I do like to go down there for other recreations. And I do like to watch the surfers. And when I go down there, if the surf is choppy, you don't see a bunch of guys running out there diving in headlong, because what's the point? What's the point in going out there? If you just want to like roll around a little bit, sure, but they're out there to surf. They're out there to catch waves. But guess what? There are no waves there. So, why would you go into your market session without some tools that could give you a good leading edge? Because hey, when you know what to expect, it makes the day a lot more. What's the best term here? It alleviates the pressure to some extent, because look, I might not be dead right, but I've got a pretty good idea of what to expect out of this market today. And going back, that most of the days are like what we saw today. There might be a little bit more, but from what I've noticed, anytime this guy is not over 60% biased one way or the other, then you better be on your toes. And when it's this close, 51.49, not exceeding 55 one way or the other, then you know that there's going to be opportunity. It's going to be brief. Might be a little bit in the beginning of the market, might be a little bit in the middle of the day and a little bit at the close, but overall, you better be light on your feet, and you better not overtrade. Now, when those days do come along, where after the first 30 minutes, this guy's pegged 70% one way or the other, well then that's the day where you put the gas to the floor,
and take it one step further. Take it one step further. You see a 70-30 ratio of green to red, and all of a sudden you see Holly taking a bunch of longs and no shorts. There's 2 indicators right then and there of what possibly is to lie ahead based on our old statistical friends at Trade Ideas.
Sure. So let's, hey, after we've said that, Steve, let's take a look. Well, looking at the price P&L graph today, right? Well, and this, keep in mind, everybody, Holly was not designed to be a black box. What is she? She is a trader that trades with, very, very high statistical probability on every entry. And she's going to trade slow market, choppy market, fast market. She is going to run into the surf and dive headlong and do her thing, because that's what she does. So you're getting to witness a statistically proficient trader trade. That is what Holly is, right? So look at her performance. Oh, I'm positive, now I'm negative. Now I'm positive, now I'm negative. non-positive, negative, positive, negative, and then finally at the end of the so-so trading day, the statistics all play out, just like the house in Vegas. Guy flies in from Japan, sits down at the high-stakes baccarat table, takes him for 3 or 4 million, but eventually, even if that guy leaves with his winnings, they're still going to be profitable over the longer term. Why? Because statistics are on their side. So today's a perfect example of the statistical probability not being perfect by any means, because we're up against the market, which is a big, voracious beast that will eat your lunch really quick if you're not paying attention.
You know, I think it's really important that we're talking about the compare account window is how important it is to have that turned on at the opening bell and leave it on. Mm-hmm. To come in after 15 minutes, or if you reset your layout, even by going to a channel and then coming back, and the compare count window will restart and resort, and that can sometimes throw off some really unusual readings, which may be why some of you might see 30 to 70% at a certain point in the day, when in fact, if it was on from the beginning of the opening bell, it might have a more smoothed out reading.
Right, so do yourself a favor and pin your compare count window. And the way we pin a window is we just right-click and we just make sure that the check mark is by pinned. That way, when we go to another channel or we spawn another layout, that window stays there. It stays pinned to your desktop. So pin your compare count so that you don't accidentally reset it and lose that data. Now, so, you know, why use the compare count one more time? Because it's going to give us an idea of what to expect for the rest of the day. And, you know, that way, if the waves aren't very good, we might just paddle out when we see a big set come in, catch that one, go rest, leave the chop for all the other fools out there that want to beat themselves up, and just be selective. So the same thing applies when we're looking at that compare count window. So just want to kind of share that because, you know, leading indicators are always good things to have as traders, otherwise known as our edge. And, you know, without an edge, we will not survive in the markets. We have to have that edge. Otherwise, we're just going to be flat and commissions are going to get us in the long run. All right, so moving right along here, let's talk about Holly's trades today. So we can see the strategy panel, and both Steve and I kind of blinked a couple of times bright and early this morning. We're like, huh, it's been a while since we've just seen only longs. So 3, 4, 5, 6 longs. And of course, just because a strategy shows up like these guys doesn't necessarily mean that the conditions are going to line up and they're going to fire trade. So these guys didn't fire trade today. We had 2 out of escalate over 20. The count was responsible for 2. We had 2 from come back to me, and this little guy looks like he pulled most of the weight today. Float on, which is focusing on the lower float stocks, kicked out 4 trades for 91 cents today. So here's what the day, you know, boiled down to. So, you know, 10 trades, up not quite a point, not too shabby. However, that's not all there is to Holly. So let us talk about the additional opportunity, what we might call trade arounds, or simply staying in the trade. So we always like to focus on this non-exit column. And by the way, ladies and gentlemen, you can look and look and look, but I don't think you're ever going to find another platform in our space that has this guy. Now, profit percent, we all know what that is. And these all look, you know, nothing really stands out, just jumps out today like the 15% winner that we had last Friday. The name eludes me right now. But everything looks pretty hunky-dory over here. And, you know, if we sort by the non-exit profit, the one that just jumps right out, or there's 2 that just jump right out, and that's AGIO and SHAG. So AGIO, 11:21 Eastern Time, Holly says get long. And so here's the intraday right here. 5-minute candles. Here's Holly as it comes down. She's getting long right here. And then pretty much off to the races. Now, the thing to point out, 36 cents. Why? Well, every time we want to see why Holly gets out of a trade, all we have to do is look at this column right here. There's only going to be 3 scenarios which Holly gets out of a trade, that's either a time stop, she got stopped out, like in this one today, which was the only stop out, or the profit target gets hit. So those are the three reasons why Holly will get out of a trade. Now, if we look at the come back to me, let's see, yeah, that was come back to me. It was designed around a 2-hour hold time. So here's our entry bar. Absolutely, Steve. Go ahead.
Well, I was just going to say, the way this day is laid out here, very few trades. The non-exit profit column is very straightforward. The exit reasons, which you explained, you forgot to include target price, which happens and is always a good thing. But when we see time stop, that's essentially Holly saying, I got to exit. I'm passing the baton to you. Go for it. Manage the trade. Do your thing. Go prosper. And so the closed profit percent just doesn't tell the story today, because every single one of those trades, with the exception of one stop hit, those were all time stops. Those were all suggested areas in which Holly said, this is where I have to leave. I'm giving the baton to you to manage this trade. So with that said, if we focus on the non-exit profit, it was a much better day, really, than Holly basically put one hand behind her back and has to score a particular score. But the alpha that was created and brought to your attention in trade ideas here was much more than what you're seeing in the closed profit in the closed percentage. There was some really, really good all day long alpha that continued on even though Holly had to get out. And we just want to continue to remind people that the time stop and having Holly exit a profitable trade with the time stop is really one of the most scenarios that we can have. I mean, it's not that dangerous to go like Jamie's going to do right there, put a horizontal line in and say, here's my line in the sand. I'm going to give it to the end of the day and let this thing work for you. So again, a stop hit, that's a totally different scenario. That is risk management, and we always try and defer to Holly on risk management. Maybe there's a condition to re-enter a trade if it turns back from red to green. That's always a possibility, and that happens a lot in the live trading room. But these basic time stops that go out green, there really never is a reason for you to just blindly follow Holly. Let her pass the baton to you, put your trader's hat on, and manage the trade, because again, it's not a black box, it's an idea generation system, but it has to be exiting before the end of the bell, and in many cases, they're exiting a lot earlier than that.
Very, very well put, Steve. And of course, the simple solution to this, and you know, a lot of people do this, I recommend doing it as well. Let's say you took the trade with Holly, pop yourself into 200 shares. Holly's getting out, which is right here 2 hours later. You can think to yourself, well, I've got my trader's hat on and I'm willing to risk down to here, so I'm either A, going to stay in the whole 200, or if I want to satisfy my greed, I'm going to go ahead and peel out of 100, take that 36 cents, then I'm going to put a stop loss on my second 100 down below here, in which case you would have done quite well. Now, even better, as you get proficient at reading patterns, what I'm seeing in addition to Holly calling along here, maybe being in a couple hundred here, one of the hardest parts for new traders is deciding when to add to a winning position. So, you know, what I've done is I've drawn a line at the first high that I put in right here, and we can see as the stock is range bound here, buyers come back in, it slowly creeps up and it penetrates that high, also known as an opening range break. Open, this is the range that's occurred, it's breaking out of that range. So, you know, if I was already in this trade, here, maybe I'll peel out of 100 here, creeps up to here, boom, I might tack a few hundred more shares on, right? And as we can see, throws a little pullback and then goes higher. Now, if you are making an entry here, you know, a good rule of thumb is to look back at the prior 15 minutes, not including the entry bar, to establish your stop loss area. So that little wiggle wouldn't have got you out, would have had to come penetrate down here. So once again, it's the only reason that you would have known about this stock today. Well, I'm not saying it's the only way you could have found it, but if you're watching our technology, you know, what better way to have the AI just go, hey, goodbye signal here. Okay, thanks. So more opportunity as the day progressed, playing off of a stock, what we call a trade around, in Holly. So that was definitely the one that had the most left in it, but this one right here is not too shabby either. The good old Shake Shack.
Pretty consistent day. Mostly time stops, and most of the non-exit profits are intact. That's the real story.
Right. Once again, the beauty, watching the compare account after the first 30 minutes, I'm like, okay, little opportunity is going to be here. Shouldn't be that crazy of a day. And then to see this type of action play out only lets me know that, today those metrics treated me quite nicely. And I think that what you're going to find is if you start watching those metrics, they're going to treat you quite nicely pretty much all the time. All right? It's a great way to pull the rug up. And when you're using something like the compare account window, you are whipping out the telescope or the microscope. You want to see small, you want to see big, you still got to have the special tools, right? Yeah, the same thing. But in any case, hey, speak of the devil. Whether we, hey, Steve, hello algorithms, bzz, 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 right here on the open. So even if we played a purist viewpoint here, okay, Jamie, that's the wrong. There we go. All right, so we're being a purist and going, okay, that's really the top, or we could have, tried to eliminate some of this noise here, and maybe we could even draw a line right about here. But the bottom line is that same pattern or that same bust out, whether you're eliminating these guys and playing the breakout here, or you're going a little early. Steve and I talk about this on the trend change lubricant sometime. Get a little early, go a little early to the party. But whether you played it here, range break, modified range break we could call it, or whether you played it here, the results are still the same. And guess who told you about it? Little Miss Holly. Little Miss Holly only made 9 cents, but whispered in your ear, you could have pulled out 60, 70, 80 cents on a stock that you know is statistically weighted to do what you think it is. Sometimes the timing is on, sometimes it's off, but it's always being put right in front of your eyes so that you can act on it.
Hey, I've got something exciting to share. It's a good dovetail with the question here. Somebody's asking, do you use the trailing stop? I don't personally, but there has been a lot of discussion of incorporating something along those lines to help the risk management and the profit retention for Holly the AI. So we just found out today, and we're letting you guys know for the first time, there is more cool functionality coming very quickly to the risk management side of Holly the AI in terms of not letting good profits roll over and go negative. There's going to be some sort of a quantitative formula to keep a nice trailing stop to lock profits in and keep profits from disappearing or going negative. That has some sort of a time decay factor in it as well, sliding scale as to where that maybe trailing stop might go. But we're real excited about this next feature, and as you guys know, especially the regulars, when we decide to innovate something, it's just a matter of weeks before it usually pops up onto the screens and becomes a reality, so we can test it and play with it and then get it out to you. But we're real excited to be continually tweaking and adding the functionality of Holly the AI, trying to make it a better system and make the risk management a little better than it is currently. So keep an eye out for more discussion on that in the future, but it's just a great new feature for some of this the premium Holly stuff.
Yes, indeed, and there's nothing more irritating than watching somebody or some entity like Holly be up 2 points in a trade, and then it all goes back. So that's what has prompted us to do this, but we didn't want to do it in the traditional sense. Everybody's always talking about trailing stop. Well, once again, it's one of those things that's been around for a long time. So as we always do, we're going to put our own spin on it. And as Steve said, it's going to be more of a time decay stop. So in essence, the longer we're in the trade, the tighter the stop is going to get, right? So it is going to be exciting. We don't know when we're going to get to play with it first. Hopefully, Steve, and maybe next week. Who knows? But the sooner we get it, and test it, then the sooner it can go out in the production beta and everybody can start enjoying it. We're all very excited about it. Okay, so as far as Holly goes, nice same day, nice performance. There was an additional basically 2 points of alpha hiding in here. And if you come to these webinars regularly, you knew how to extract it. For those of you who are new, eventually you'll come around to it as well. It might seem a little weird at first. But Consider yourselves lucky that you're stumbling onto this technique because we showcase it several times a week. And the nice thing about it is it just makes a whole lot of sense, and it's very simple. So through repetition and applying these, it's never really a system that we're teaching you. It's more of a methodology. So we see things and we react because we're prepared. We know how to react. As Steve likes to say all the time, chance favors the prepared mind. And man, that really does ring true.
Yes, sir. So while we're talking about some of these premium features, there's one premium feature in the TI Premium that is not talked about often. It's kind of the stepchild, and we're going to bring it back to light today. Remind people of a setup and something that's available only to the premium users, which again includes the AI Holly, the back testing, and the price alerts. But we also have this thing called RBI and GBI, and the TIQ in front of that is the way in which it was derived. The TIQ is the Trade Ideas quant model, where we've got some pretty smart guys on our team and other people that know how to code and write good algorithms, or maybe that's not the right word, but it allows us to go in and create some more interesting stuff. And the first thing to come off that roll is something that Barry is using in the live trading room every day. And RBI GBI stands for red bar ignored or green bar ignored. And so it's only available to the premium users, and there's a couple different ways in which it can be used.
Hey Steve, real quick here, how about I just flip it over and make you the presenter? Do you have those? Or do you want me to do it over here?
No, I don't have them. I just want to show how to show them how to load it up. You basically go to a file.
No worries.
Yeah, I don't have anything to show. It's after hours, but it's TI exactly. Now the RBI 5 is a 5-minute, and it's checking for red bar ignored. What that means is it's looking for stocks that are putting in good green candles, a minimum of 4 green candles, 5-minute candles, and then all of a sudden a red 5-minute candle comes in. Okay, that's the beginning piece of this puzzle. The subsequent candle begins to grow green, hopefully, and if that 5-minute candle closes green, we've just had a green, 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 red, back to green. And that's kind of an interesting pattern recognition to try and find areas or stocks in motion that aren't quite ready for a pullback. There's a very, very strong trend intact, and this can usually be a telltale sign of, hey, there's some more nice trending action to go. That red bar was completely overwritten and ignored by the sellers and the buyers. The buyers just plunged right back through it. There is probably not going to be a pullback. Now, there is a nuance on this one. There's 2 different ways to launch this, and I believe in the live trading room the other day, a consensus was made that we're not going to launch these the way they are because they have to have that final 5-minute candle completed. And sometimes that's being a little bit late to the party for waiting for that confirmation to complete. If Jamie goes back to launch a new one, you'll notice that the bottom area of the menu there says preview. The preview is a different way to do it. It's essentially alerting you when the red candle is completed and the very next candle is starting off green. So it gives us a few minutes head start and triggers the alert in a much earlier fashion, albeit it may not always be as reliable, but it's giving us an earlier look instead of waiting for that subsequent green bar to finish and complete. So I think there's been a consensus in the development side that we're going to move towards RBI, GBI all being the preview faction where it doesn't wait for the final bar to complete. It's going to give us all a more earlier look and just, again, allows us to put our trader's hat on and trade accordingly. Now there is an example, we'll just show a quick example of what this is visually, and I believe it's on the stock Kite. There was a slide that showed this, it came out earlier, but the slide's irrelevant. It was just to show you that it did come out on the RBI at such and such time of day. And let's go ahead and zoom in a little bit. Now, believe it or not, that is a red candle. It's very much a doji, but there's some redness in there, and that is where the alert came out today on the 5-minute RBI. Red bar ignored. You can see we've got about 8 or 9 green candles, and then a red candle gets thrown in there. The red candle is completed, and that's the first step of watching this pattern recognition. The next candle starts to develop. Hey, what do you know? It's green. So rather than waiting for that 5-minute candle to complete, the alerts are now on the preview setting. As long as that second candle starts to build green, it alerts you to it. Hey, here's a situation where it wasn't quite ready for a pullback yet. The buyers are still in control. They overwrote that red bar. And I'll even add on this one, this is a nicer setup than most because I really like the way that wick on the red bar sucked right back up. It's not a full big red body bar.
It's always comforting.
Always comforting when you've got those bottom side wicks underneath your long bias. So again, just a quick mention to the underrated RBI GBI, which is part of the TI premium, and as I mentioned earlier, the TIQ. You're going to be hearing more about that. There's going to be some pretty cool stuff coming out where our developers are using the TIQ to spit out some interesting additional pattern recognition and other type of cool goodies that will be coming out in the future. But again, that's one of those things that's relegated to the premium subscribers. So we hope to see you there someday. And if you want more information on the RBI GBI, definitely in Barry's live trading room, he gives you great real-time examples of those. Just wanted to touch on that.
Yes, indeed. So good things come down the pipe with the RBI and GBI. And then also, too, we've got this little guy right here who's been spitting out some incredible plays. For those of you who have had the top predator in the past, well, we've kind of, I don't know what changes Dan made to the config, but we've also changed the name. So what used to be top predator has now become Alpha Predator, a little bit more of a fitting name. I think everybody would agree there. So, you know, this little guy was spitting out all kinds of stuff today that was moving either to the upside or the downside. Let's see, of course, this is one that we have to talk about because I think the guys in the trading room pretty much cleaned up on this one today as well. Seeing a lot of people, you know, talking about CLRB today. And of course, from a trading perspective, there were several opportunities to hit this stock today. You know, number one, this is going to get everybody's attention. You know, when it closed at what, 315? What do we open at today? A little bit of a gap up, right? Yep, 25-cent gap up, wide range bar. So everybody knows, okay, this thing's in play today because, you know, obviously. Just using our trader's hat, I mean, look at the action typically, you know. When you start to see this thing leaping around, you know, of course, what my eyes go to initially is just that initial breakout, you know, after right about an hour. Nice hour opening range breakout. Boom, and then it's off to the races. Ooh, I got to take a breather, catch my breath. Perfect little, you know, NR7 wedgie type, which lets you know, look, sellers aren't coming out. They took it down to here. Now we're NR7ing again. Whether you go, you know what? I know this is indicative of a price move. They couldn't take it any lower here, so I'm going to go ahead and add to my longs. Or if you really want to get, you know, precise about it, pattern repeats itself yet one more time. Another range break for what appears to be the larger part of the move for the day. So, you know, from here to here, you know, what are we looking at? 335 over about $1.15 on a 325 stock. I mean, talk about alpha. This is it, ladies and gentlemen. This is what alpha is. Textbook. You know, getting that type of move on that type of equity invested. You know, that's what we're all here for.
Yes, sir. I know everybody wants a copy of the Alpha Predator, who is just a minor change.
I mean, look at this one today, right off the open, whoosh, right? And you know, we could go on. Of course, we're just looking at what the list looked like here. If everybody takes note of this little time slice, this is just what the list looked like 5 minutes into the open for the next 5-minute period. So 9:35 to 9:40 Eastern, and of course, this thing's always changing because of this filter complement that's in play here. It's pretty specific, so stock's not meeting that filter criteria. It can drop off, and then one that wasn't even there before, it's going to pop on, but they're all going to be the same type of animal. They're all going to have potential to have big moves. Look, there's another one, KERX today. I mean, this little guy's just on fire. So, Steve, if you haven't already done so, are you going to drop that one? Should I drop it into the chat?
No. Can you hear me? I'm going to go ahead and do it right now.
Sure.
Oh, matter of fact, I did drop it in the chat. Excuse me. Yeah. I know some people were looking for the Alpha Predator configuration cloud link. It's now in the chat window, not the question window, but the chat window. And there might be a couple of interesting ones on here that need to be set for some price alerts. What do you think?
Yes, indeed. We'll go ahead and peruse those guys. Look, this would have been I mean, well, that's a little weird, but obviously it's already gone, and then now it's doing it again, just like the intraday repeats itself that I was
Mhm.
pointing out on a couple of charts. It's kind of the same. All we're doing is drawing some horizontal lines, and see, that's the beauty of it. It's just so simple. If you can draw a horizontal line, you're halfway there. So, Steve, I tell you what, you want to go through all these and then
No,
throw
I
in the
was
ones
just
that we were talking about before?
no, I was going to say I want you to, well, yes and no. I want you to reset those to the close because there's a couple of decent ones on there.
Aha,
You got your
I
morning
got you.
set up there.
Hmm.
And then, yeah, we'll take a look at a few. We will set up a few price alerts. And then for those of you who have the functionality to accept the cloud-linked price alerts, we'll be happy to share that with you guys as well.
Wow, and when I said show me today, right to close, we got plenty of things to contend with here.
Yeah, we have a
Question is,
lot, actually.
how would we like to sort? Maybe by share, maybe by float. Look for the smaller floats first.
Mm-hmm.
All
Mm-hmm.
right. So do we want to go over this list first, or do we want to throw in the three that we
I
were
had a
talking
couple. Yeah, I
about?
had a couple that we talked about. But since we know we got some good ones there and some good content, let's go ahead and hit those.
You want to hit
The three that we
this
talked
list?
about.
Okay. Yeah, we'll get those out of the way. All
We'll
right.
get
I
those.
believe
It was AXAS.
AXAS, yeah.
Okay.
And here we are looking at the daily.
All right. So putting in a nice bout, and of course, yes, we're noticing this is a $1 stock, but these things can move, and when they decide to move, and when they've got the volume underneath them, this is where the real alpha could be extracted. Yep, exactly. The top of that red candle, I do believe, deserves a price alert to see if we can push through where the sellers jumped in there and pulled back to build a higher base camp at 110. Let's see if we can catch a price alert on that.
And I'll make it busted by a penny at least, so we'll use a price of 118. And ladies and gentlemen, notice that I'm putting notes in here so I know how I came up with the idea for this, because as Steve and I always like to say, this is when you're rational and you're methodical, and that way when the alert hits in the middle of the day, there's no panic, there's no overexcitement, right? There's just reacting. All right.
There's another one on
Now,
there that I want to just shoehorn in here real quick. It is on the list. Oh,
hold
go
on,
ahead and finish your
Steve.
thought.
I think that I already have that one on there.
Oh, it turned
Nope.
green on you, huh?
Itself, well, I put in the wrong price is what I did, so bear with me here.
That's what you did. Yep.
Shall delete it. Let me just make sure I'm deleting the right thing here. Okay. All right, ladies and gentlemen, user error on that one. So the high was $1.26 on this one. I don't know what I was looking at earlier. So we're going to have to say $1.27, right?
Here we go.
All right, rises 2. It's a TCL setup.
No, it's not. Isn't it? No, it's a Alpha Predator setup.
You're right. I'm so used to writing TCL
Yeah, exactly.
in there. Yeah. Okay.
All
So
right,
now
David.
we
Yeah,
have a working.
we'll touch on that price alerts window here in a little bit. It'll come into play. We've got a working price alert. BCRX. I think we looked at that one earlier.
Yeah. So there's our level of
Interest
interaction here.
Mm-hmm.
So we're just going to take the tops of these candles right here, and we got 373, so we're going to say 374. Rises to 374. Nice daily, whether it's through the alpha. All right.
All right, I've got one I want to throw in there, a special late candidate. It is on the alpha as well. It's SDLP. I don't know where it is on your chart, but SDLP is something of interest.
Mm-hmm.
I think this is one we get a head start on, like we've talked about in the past. We see that little minor range prior to the upside back there. I think if it breaks that little pivot level that we're right smack touching on, it's probably just a high above today's high.
553 or so.
There could be some real nice momentum carrying it into that $6.10 whatever level that is on the resistance.
Mm-hmm.
So again, this is one that we pulled off the Alpha Predator.
553, and there we have it.
Okay. I had a great example on BV, but I think that this one is moving after hours. But it's probably worth
I
just
think
looking
you're
at
right.
anyway. Yeah. Let's go back and assume it didn't move after hours and it was calm. That line that we put in there, that Jamie put in there, this is a pullback line, and this is where we
Hmm.
can start to get ourselves some better entries. Rather than being that guy to chase the third and fourth green candle just to suffer the inevitable pullback, we look for areas of interest where other people's pain can become our gain. And that makes an interesting level that's being highlighted there. It's kind of the scene of the crime that the stock broke out of. And many times you'll see stock action retest those pivot levels where it was once resistance to become future support. So rather than risk a way late entry and a very risky type of entry, we wait for a pullback. And because in the bigger picture, that's an interesting looking chart. We just don't want to be the one chasing that mark today. So this would be
Right.
a great candidate for a pullback, but we this one because the price, I believe, has already gotten way far away from us, and after hours, we'll probably never get hit on that.
Right, but needless to say, everybody's going to watch it tomorrow, right? Because, hey, we don't know if it's going to open up here tomorrow or down here or maybe higher, or it might retrace. So if it does open higher and then it retraces, there still might be opportunity. So kind of pointless to set the limit alert, but I would still urge everybody to, hey, don't forget about BV on tomorrow's session.
And going down to the price limit alerts, you guys, in last week watched us set a lot of these alerts, and we talked about how we like to, at least Jamie and I like to clear these things out every month and start from scratch again to remind ourselves that we are getting the right type of entries to generate good alpha and good positive movement. So, not a whole lot of triggered here, not a big list, relatively speaking, but Jamie's on the right track. He's seeing the market in the right respect. The levels that he's setting for triggers are moving on for further profit and loss, indicated by the upper left corner there, up $20.67. This is a great teaching tool for pros and new traders and novice traders alike. It's constantly giving us feedback as to how is our method working. Not only that, it's allowing us to have good trades served up to us in real time. Rather than chasing our tail, looking for the next best trade, we've already identified a few great trades, but we want to get them on our terms. And usually getting them on our terms is the difference between being successful and not successful in the game.
Very true. And the nice thing about these, compared to the old way of testing out something, or whether it's just individual plays or a strategy in and of itself, paper trading, great. I mean, talk about old school way to do things. This is constantly in your face. It's constantly giving you feedback. When we try to do it the old way, I mean, come on, we humans, we like to take shortcuts and kind of forget about things just to make ourselves feel better. But we all know that that's not the right way to do things. All right. So simplicity is key here. That's what reverberates through everything that we're discussing here today, is the simplicity of it. But then the constant feedback. Yes, every day I see, and kind of circle back around to 3 or 4 weeks ago when we were coming up, and getting out of the doldrums, not the doldrums, but as we were making our way back up into this range, for a while there, I mean, Steve and I would set alerts on Monday, and by Thursday, they would just be up huge amounts. Well, we've noticed the slowdown. They're still working, but see, these positions had to be held for right at 2 weeks to get these types of numbers up here. But it's just been a slow, steady ride. So it's also comforting in the fact that when you do see the market do this, I mean, my blotter was barely affected this morning when this action was happening. Of course, this is all in the moment. Everybody's like, oh my God, what are we going to do? Of course, if you consult your daily, you know that we're probably more than likely, unless there's some big external macro event unfolding, we're probably just not going to do it. So yeah, while nobody likes to see this when they're long a bunch of stocks, it didn't really affect this blotter at all. And then, then it actually gained throughout the rest of the day. So the constant feedback, the ability to share these alerts, just like we're going to share the ones that we just created with you guys, and you can always have the created, so you can see the creation date, and then over here I have my trigger date, which tells me when they triggered. Mm-hmm. So, always we should be getting the colorized version of this over here, percent triggered, CRBP, which, by the way, came from one of our one of the guys
users.
that's an old school friend of the firm, Dan Shapiro, you know, 34.5% just on that one little stock right there, you
So
know.
you got that from Dan. He shared that with you.
Yeah, and I was
There's a
like, you know
classic
what? This
example.
looks exactly what we do. See,
It's a
that's the
classic
beauty.
example of being able to share great information with each other if you trust the other
Uh-huh.
party's understanding of the markets. And just to remind you all, myself, Jamie, and Dan, and Brad included, we've got over 80 years of combined market experience. And so when we start marking these things up and combine with other people and other power users that run their own services or their own chat rooms, or they're just good traders that like to share, there's a very powerful value in there to be able to have that ability to share these untriggered alerts, basically borrowing somebody else's homework and then having it all come to everybody at the same time.
And so, poetry in motion right there. One of our users that we've known for a long time, I'm sitting there looking at my Twitter feed. I'm like, well, that looks real tasty. And then look what happened. Boom,
I do
alpha.
that too.
That is what alpha is. 34% on one trade. Not only is that alpha, that's alpha. I mean, that's what it's all about, is getting those types of moves, those types of returns. Not easy.
Is CNBC
But
talking about CRBP?
no,
Probably
no, no,
not.
no. They're probably talking about Trump and that reporter that he has the feud with. Really important stuff.
Fed market meetings, global banks. Yeah, so
Exactly. Hey, you pointed this out to me on Twitter the other day, Steve. Look who's rattling his saber again. Alan Greenspan.
go away.
Yeah,
You started this mess, Alan. Mm, well,
exactly.
it's
All
hard.
right. So let me do this before we get Scott back in the room to tell everybody how things have changed. Let me resort these by the create date. And we don't have a lot of them today, but we're trying to keep this just to things that really meet the pattern. So I'm going to share these alerts with you guys. Let me find my chat area, and I'll drop it right in. Okay, those guys are in there. So those of you that have the limit alert functionality, you know what to do. Just load that up. It'll just fold those new alerts right into your existing ones, and you can easily sort by the day created.
Turbo brakes compare count window. I believe I put that in there, but I'll put another copy in the chat link there for you, David, while we say hello to Scotty.
Hello, Scott.
Hello. Okay, my mute button wasn't doing anything for a moment. I'm back. All
Yes, you
right.
are.
Yeah. Well, thanks everyone for joining us. The audience is really engaged today, so I could tell that they're excited. So I want to emphasize that we provide more than just selling you a service. We support like webinars like this one, and we have other webinars during the week and every week unless there's a holiday change or some other kind of conflict. So, and we also have a free trading room hosted by Barry Einerson, who's a great trading room moderator. He's a successful trader, has been using trade ideas forever, like Steve Gomez has been using trade ideas forever, and so has Jamie. So we have the traders room. Come to that every day. It's free to you. Just come to it during market hours, see what the other guys are doing. People are calling out trades. It's a great place. Barry shows you how to do things too. Office hours is our Monday webinar with these same guys, Jamie and Steve. And it's also an informative educational webinar about both using our software and just good trading advice. So even if you're not using trade ideas, you'll learn something anyways. And yesterday would have been our QA demo webinar on Wednesdays with Dan, the CEO, and Brad Williams, basically he is our product development guy. That was canceled this week, but it'll be back in effect next Wednesday. It's at 4:30 Eastern, 1:30 Pacific is the normal time. And that's a good one too. We show off new features of the software and show off a little bit of demo of stuff, and they take your questions. And today's the Trading Studio on Thursdays, and that's most every Thursday. So the next slide, I just wanted to run that through by you guys that might not be subscribers yet, so you understand the value that we provide in addition to this amazing software and the technology that we're developed. So we want to thank everyone for attending, and you can get these slides, some of these from the PDF that is attached in your handouts panel. And anyone that's not signed up for the free Trade of the Week, just go ahead and do it. You get invited to those exclusive Trade of the Week webinars on Wednesdays. It's the only way you get invited to them. And you just go to tradeIdeas.com/free, fill out the little form on there with your name and email, and it puts you right in the queue to get the Trade of the Week in your inbox on Monday mornings. And it tells you how we found the trade, what we think is going to happen to it, and then you can come to the webinar on Wednesday, and we'll discuss how it's done so far since the Trade of the Week came out, and we'll talk about some of the previous ones and also take your questions. If you have any, this webinar is recorded, by the way, and it'll be available to you sometime later tonight or tomorrow morning. You get a little follow-up email with a link to the playlist where you can find it. So if you have any questions at all, just email us. Info@trade-ideas.com is the appropriate place to send any questions you have. That gets routed to the team member that is best suited to help you out. You can follow Steve Gomez on Twitter. He's @TodayTrader, or you can follow along with Jamie @QuantBot. Facebook.com/TradeIdeasPro is where you find us on Facebook, and we sometimes post some different things there than we do to email and in our webinar, so it's worth checking out if you're a Facebooker. We also have a phone support line. Typically, though, that's best suited to help you with your billing issues, as the support person on the phone generally will not be able to tell you anything about trading. Our trading guys are too busy doing software development, webinars, and all this other kind of stuff for that. So send that stuff to info@trade-ideas.com. Thanks, everyone. Thanks, Jamie. Thanks, Steve. And we'll see you next week.
All right.
Thanks, everybody.
Thanks. Bye-bye.
Cheers.